Hi friends, I'm basically recording this video for the two problems which we could not cover in the class. So basically this is for capital rationing area which was pending in the class. We could not complete it because of the time constraint. Now coming to capital rationing will come to page, just a minute. Okay, it's covered here. Capital rationing basically refers to a scenario wherein the demand which is there for the money is not sufficient to meet the supply of the money. Now what does this demand for money not sufficient for supply means? When I have to do a project gets done by me as long as it has positive NPV. That is the rule. So let's assume a company has 15 projects. So let's put it here. 15 projects, 10 projects positive NPV, 5 projects negative NPV. Now as a rule what we have understood is wherever there is a positive NPV I have to do that project. In case it has a negative NPV, I will have to reject a project. So these 10 projects put together you need 20 lakh rupees. Now the availability of money is only 15 lakhs. If I have only 15 lakhs and I need 20 lakhs of money, it means I do not have adequate money to meet this expense. Then what am I required to do? So I will have to go through a process by which I pick and choose the projects. The issue with me now is I don't have adequate money to meet all the 10 projects. Now within this 10 projects, which one to accept and which one to reject is basically something called as capital rationing. It is similar to limiting factor which you could have learnt in marginal costing. A limiting factor is one whose demand is more than its supply. In case of capital rationing also, the scenario is that the demand for money is 20 lakhs whereas the supply of money is only 10 lakhs. So I don't have adequate money to meet the projects. So what am I going to do? I'm going to pick and choose the projects. Now the term capital rationing means money is in short supply. Short supply means the money is less than the demand for money. The available money is less than the demand for money. Now there are two types of projects. One is called as divisible project. A divisible project is one where you can do a part of the project. Assume you need 50 lakhs for doing a project. In case of divisible project, you can end up doing a project which is worth something like, if it's a 20 lakh project, a divisible project, even if you have 10 lakhs, you can do a part of the project. That's called as divisible project. Whereas the other part is called as indivisible project, where you cannot do a part of the project, you will have to do only full project. There are series of steps which are there. All of this I'm going to explain with the problem. So let's go to question 20. Shiva Limited is planning its capital investment program for next year. It has 5 projects, all of which has a positive NPV at the company cutoff rate of 15%. So every project has a positive NPV, which means it's all are acceptable project. Investment outlay and present value. Now this is the outlay of the projects and these are the NPV. NPV is positive, which means all are acceptable project. The company is limited to a cash spending of 1,20,000. You are required to optimize the return from a package of projects within the capital spending limit. First the question has said divisible. I'll also rework if it's indivisible. Let's go through the steps. Step 1, check whether capital rationing exists. Now how do I check whether there is a capital rationing or not? I will have to find out first NPV of the projects. After finding out the NPV of the projects, we need to find out acceptable projects and non-acceptable projects. An acceptable project is one which has positive NPV. In this case, all the 5 are acceptable projects. So acceptable projects A, B, C, D, E money required for acceptable projects. Whatever is acceptable, how much money do you need for them? Which is 50,000 plus 40,000 plus 25 plus 30 plus 35. So 50,000 plus 40,000 plus 25,000 plus 30,000 plus 35,000. This is the money I need for doing all the projects. Money available. I have only 1,20,000. Capital rationing exists as the money available is lower than the demand. Unfortunately, I wanted to do all the 5 projects, but the adequate money is not available. So what am I required to do now? I will have to pick and choose the project. So if you look at the steps, step 1 would be check whether capital rationing exists. So okay, we have in fact clubbed both these 2 steps together. Identify acceptable project, which the question I had given. Step 2 is identify whether capital rationing exists. Capital rationing exists when the money available is not sufficient to take up all the acceptable projects. Now I'll go to the next step. Step 2, ranking of projects on the basis of NPV by outflow. Now let me first capture the information as given in the question. Project outflow NPV by outflow. This is the information. I have A, B, C, D, E. Outflows are 50,000, 40,000, 25,000, 30,000, 35,000. This is the outflow of the projects. NPV are given 15,400, 18,700, 10,100, 11,200, 19,300. That is a 50,000 worth of an investment will give you 15,400 of NPV. 40,000 will give you 18,700 of NPV. Now for every rupee of investment, what NPV do we get? So NPV divided by outflow. Now based on this, I will do a ranking. Whichever gives me more NPV per rupee, that is my priority. So my ranking is rank 1. This gives me maximum 0.55. Rank 2. This gives me the second highest. Rank 3. Rank 4. And rank 5. This is my ranking. After completing the ranking, so that is project outflow NPV, NPV by outflow, and then you do the ranking. After you are done with ranking, I'll have to go to the next step, which is allocation of money / selection of projects. Technically we are selecting the projects. Which one do I go ahead with? Project money allotted, balance money, NPV. Now I have 1,20,000. I'll first start with a rank 1 project. If I have sufficient money, I'll do the rank 2 project. Sufficient money, rank 3 project. Sufficient money, rank 4 project. It goes on. Anyway, you cannot do all the 5 projects because adequate money is not there. So I start with E. E, I allot 35,000. 35,000 goes in E. I'm left with a surplus now of, I'm left with a money of 85,000. I had 1,20,000 of money to do the investment. In that, 35,000 has gone for project E, which is the rank 1 project. Balance money left over is 85,000. Now what NPV does this give? This gives me an NPV of 19,300. Started with rank 1, allotted 35,000, leftover money of 85,000, NPV of 19,300. Then I go to the rank 2 project, which is project B. In project B, I spent 40,000, left with the money of 45,000. I have spent and I'm left with 45,000. In this project I earn 18,700 of NPV. First project I earned 19,300. Second project I earned 18,700. Then I go to the rank 3 project, which is C. This will take away 25,000, left with 20,000, and I can earn an NPV of 10,100. My rank 4 project is D. Now unfortunately D needs 30,000. You need 30,000, whereas you have only 20,000. It means you cannot do the entire project D. Then what can I do? It's a divisible project, so I can do 2 by 3 of D. What is 2 by 3 of D? I have 20,000. The project requires 30,000. So you cannot do the entire project, but you can do a part of the project. So my next project is not technically D. It is technically 2 by 3 of D. And 2 by 3 of D is 30,000 into 2 by 3. That is the money allotted. You are left with 0 rupees now. You have already utilized fully. And this will give you NPV of into 2 by 3. 11,200 into 2 by 3. Now total, I have invested 1,20,000 which I had, and I am going to earn NPV of 55,567. Invested entire amount and got 55,567. 1,20,000 is the money available. We invested it. We got 55,567. Clear? Now, the requirement of the question was it has 5 projects. You are required to optimize the returns from a package of projects within the capital spending limit. Now, final my answer is project to be selected E, B, C and 2 by 3 of D. NPV what you can earn is 55,567. This is something called as an divisible projects. I'll repeat the steps here. I initially check whether capital rationing exists. Yes, capital rationing do exist because you need 1,80,000 whereas you have only 1,20,000. Now after that what we have done is we did a ranking which indicates which is the best project in terms of the NPV it can generate. After that we allotted the projects. This is a scenario where the projects are acceptable, kind of easy to do. Now projects are projects are divisible. Now I'll get to something called as indivisible projects. So we'll proceed to indivisible projects now. In indivisible projects, this remains exactly same. You first check whether capital rationing exists. Yes. Then you do ranking. Till that everything remains same. My step 3 is combination of projects. There's no concept of allotment. You go through a combination approach. Now I'll take you through what happens in a combination approach. Projects, money invested, NPV earned. Now what you will do is you will try to do various possible combination, that is rank 1 35,000, rank 2 40,000, rank 3 25,000. With this I cannot even do rank 4 and rank 5. We cannot do any of these projects because 35 plus 25 plus 40, 1 lakh is spent. I have only 20,000. With that I cannot do D, I cannot do A. So my first combination is rank 1, 2, 3 hyphen, which is E, D, and C. Rank 1, 2 and 3. In this process I have invested 35,000, 40,000 and 25,000. We have invested so much money. This will give me NPV of 19,300, 18,700. This is my one classification, rank 1, rank 2, rank 3. I will try doing various multiple combination. Then I'll do rank 1, rank 2 and rank 4. Like 1, 2, 3. We'll see whether rank 1, 2 and 4 is possible. 35, 75 and 1,05,000. You can do rank 1, 2 and 4. It's possible within the available limit. So my next combination is rank 1, 2, 4. This will take away E, B and D. We'll invest 35,000, 75,000, 1 lakh, sorry, 1,05,000, and this will give me an NPV of 49,200. Rank 1, 2, 3 we thought to be the best ranks, but rank 1 to 4 gives a better NPV. Reason is you are able to invest more money here. We are able to invest 1,05,000 vis-a-vis only 1 lakh in the earliest step. Then let me see next combination, rank 1, 2, 5, if this is possible. We did 1, 2, 3, 1, 2, 4. Let me see if it's 1, 2, 5 is possible. 1, 2, 5 is 35,000, 75,000, 1,25,000. Not possible. I have only money available to the extent of 1,20,000. This is 35 plus 40, 75 plus 50, 1,25,000. So let's scrap this 1 to 5 combination. That's not going to work out. Then what else can I do? 1, 3, 4. 1, 2, 3, 1, 2, 4, 1, 2, 5. We tried doing that. 1, 2, 3, 1, 2, 4, 1, 2, 5. 1, 2, 3 was possible. 1, 2, 4 was possible. 1, 2, 5 is not possible. So let's 1, 2 wala combination is over. Now 1, 3, 4. 1, 3, 4 is 35,000, all put together 90,000 you invest, and this will give you 4,600. What is 1, 3, 4 is E, C and D. Then rank 1, 3, 5. Let's see whether 1, 3, 5 is possible. 35,000, 60,000, 1,10,000 possible. This will give me 44,800 of NPV. 1, 3, 5 is E, C and A. 1, 2, 3, 1, 2, 4, 1, 2, 5. 1, 3, 4, 1, 3, 5. Finally rank 1, 4, 5. Let's see whether it is possible, which is E, D and A. 35,000 plus 30,000, 1,15,000, easily possible. This will give me 45,900. 1, 2, 3, 1, 2, 4, 1, 2, 5, 1, 3, 4, 1, 3, 5, 1, 4, 5. Everything with 1 is done. Now let me try another combination, rank 2, 3, 4. We are eliminating the project 1 itself. Maybe it doesn't make sense to do rank 1 project. Maybe, I'm not sure on that. So, B, C and D. This is 40,000 plus 25,000 this can give me 40,000. Rank 2 comma 3 comma 5 which is B comma C and A. 40,000 this will give me 44,200. I am just adding the NPV of those projects. So EBC, EBD, that is 123, 124, 125, 134, 135, 145, 234, 235, rank 2 comma 4 comma 5, 234, 235, then 2 comma 4 comma 5. You are just trying to arrive at various possible combination. B comma D comma A. Project B, project D, project A. $1,20,000 possible. This will give me NPV of 234, 235, last possible combination, rank 3 comma 4 comma 5. This is my last possibility, which is C comma D and A. This is the last possible combination. These are the various possible combination. When you have divisible projects, you will have to end up doing some indivisible projects, and I am going to select this. This is what gives me maximum NPV. Rank 1 comma 2 comma 4. Rank 3 we are rejecting. So I will do project 1, 2 and 4. I will invest only 1,05,000. I will be left with a surplus. That's perfectly fine. I don't have an option. So we will invest 1,05,000 and earn NPV of 49,200. Rank 1 comma 2 comma 4. Step 1 and step 2 remain same. Here you have to do combination 1 to 3, 1 to 4, 1 to 5, 134, 135, 145, 6 possible combinations, 234, 235, 245, 345. That ends there. Okay, then I will proceed to the next question. So if it was divisible, we had to do E, B, C and 2/3 of D. We were earning more NPV because we invested the entire amount. Now I am not able to invest the entire amount, so I will do only E, B and D and earn NPV of 49,200. Let's proceed then. Question 21. Elite Cooker and Company is evaluating 3 investment situation, that is produce a new line of aluminium skillets, expand its existing cooker line to include several new sizes, and develop a new higher quality line of cookers. If only the project in question is undertaken, the expected present value and the amount of investment required. So this is what you have to invest and this is what you will earn. If project 1 and 2 are jointly undertaken, there will be no economies. The investment required and present value will be the sum of the parts. With 1 and 3, economies are possible in investment because one of the machine acquired can be used in both production process. That is, if you do 1 and 3 together, you will have to invest only 4,40,000. Whereas 1 separately 2,00,000, 3 separately 2,70,000. But combination, you have to invest only 4,40,000. Similarly, if you do 2 and 3, there will be economies in producing the product but not in investment. So some place investment can come down, some place cash flow can go up. If all the 3 projects are done simultaneously, the economies noted will still hold good, However, 1,20,000 extension on the plant will be necessary. Which project or project should be chosen? So kind of analysis which states that what project do I undertake. Again, I'll have to do something called as a combination analysis. So let me take you through this now. Let me first capture the base information. Project, investment, inflow, NPV. These are the scenarios. You can separately do 1, 2 and 3. On 1 you have to invest 2 lakhs. This is what you have invest, 2 lakh, 1,15,000 and 2,70,000. Inflow can be 290, 185, 4 lakhs. These are the possible inflows. So on a standalone basis, these are the NPV of the projects. 1 will give me 90,000, 2 will give me 70,000, 3 will give me 1,30,000. All these are mutually exclusive, so I can do any combination. So I'll do 1 and 2 together, 1 and 3 together, 2 and 3 together, 1, 2 and 3. So in all the 7 alternative, whichever gives me the maximum NPV, I am going to go ahead and select that 1 and 2, 1 and 3, 2 and 3, 1, 2 and 3. Now let's read the question. If 1 and 2 are jointly undertaken, there will be no economies. That's saying there is no benefit, boss. If you do 1 and 2 together, nothing will change. It's going to be sum of parts, that is investment, inflow and NPV. I can earn an NPV of 1,60,000, perfectly fine. Done. Then 1 and 3. If you do 1 and 3, economies are possible in investment. That is, you are going to use the same machinery. Because of that, your investment is not 2 plus 2,70,000. Your investment is only 4,40,000. So investment is 4,40,000 and returns which you generate is 290 plus 4 lakh. So indirectly you end up earning 2,50,000. See, look at this scenario. What is happening here is, this gives you NPV of 90,000. This gives you NPV of 1,30,000. 90 plus 130 should be 220. But because of economies of scale, it adds up to 2,50,000. Next, 2 and 3. When you do 2 and 3, there are economies in marketing. Because of that, the present value of future cash flows is 6,20,000. That is, if I add these two, I'll get only 5,85,000. But the question says, if you do it together, because of certain benefits, you will get 6,20,000. So my 2 and 3 wala part is, this is my investment. But the inflow which I am going to get is 6,20,000, and this will give me an NPV of 2,35,000. Again you see, 2 and 3 put together is only 2 lakh, whereas here you get 2,35,000. Now finally 1, 2 and 3. If all the 3 projects are undertaken simultaneously, the economies noted will still hold. However, 1,25,000 extension on the plant will be necessary. They are saying whatever economies you have talked about will continue to be there, but you may have to spend another 1,25,000. Now there are 2 economies the question talks about. When you do 1 and 3 together, there is an economies on the investment. When you do 2 and 3 together, there is an economies on the inflow. Now listen, it is going to be 4,40,000 for 1 and 3 together, plus another 1,15,000 for project 2, plus 1,25,000 for plant expansion. 1 and 3, 4,40,000. I am not adding 2 lakh plus 270. That's not going to work out because there is an economy. So 4 lakh 40, another 1 lakh 15, another 1 lakh 25,000 for expansion. When it comes to inflow, the inflow is 6 lakh 20 for 2 and 3, and another 2 lakh 90 for 1, and this is the NPV I generate. In fact, it may earlier look like 1, 2 and 3 has to be done together because all are positive NPV, but final answer is you have to do project 1 and 3, not 1, 2 and 3, because when you do 1, 2 and 3, the issue is you have to spend extra money for expansion. Because of that, it doesn't look lucrative to do all the 3 projects. My final conclusion is I will have to do project 1 and 3, not 1, 2 and 3. So we did project 1, got its NPV, 2 got its NPV, 3 got its NPV. As a usual rule, it will be addition, but in this case it's not going to work out, because 1 and 2 together when you do, no economies. 1 and 3 when you do together, there is economies in investment. When you do 2 and 3, there is economies on inflow. When you do 1, 2 and 3, there is economies in investment, economies in inflow, but there is extra money required to do the plant expansion. Clear? So with that, the capital rationing problems are over.